The biggest IPO in financial history might be closer than most people realize. If SpaceX goes public at the valuation many investors are discussing, it could instantly become one of the largest companies on Earth, worth more than some of the world's most recognizable companies combined. And if that happens, millions of investors could end up owning SpaceX stock without ever actively choosing to buy it. Because the real story isn't just about rockets. It's not even just about Elon Musk. It's about how modern financial markets work. And more importantly, how passive investing could automatically direct billions of dollars into a company the moment it enters major stock market indexes. But before we get to that, we need to understand what SpaceX actually is. Because most people think SpaceX is a rocket company, and that's only part of the story. Today, SpaceX is really a collection of multiple businesses operating under one roof. Some generate enormous value. Some consume enormous amounts of capital. And understanding the difference is the key to understanding whether the valuation actually makes sense. So let's break it down. If rockets built the brand, Starlink built the business. And that's an important distinction. Because while rocket launches attract headlines, Starlink generates the majority of the company's economic value. In just a few years, Starlink transformed from an experimental satellite project into one of the fastest-growing telecommunications networks in history. Thousands of satellites orbiting Earth, millions of customers, coverage across more than 100 countries, airlines, ships, military contracts, and remote regions that previously had limited internet access. Starlink isn't just another internet provider. It's an entirely new communications infrastructure built in space. And that's why many investors view Starlink as the true crown jewel of SpaceX. But here's where the story becomes much bigger than SpaceX itself, because even the greatest company in the world can become a poor investment if the price is too high. And that's where market structure starts to matter. Over the last decade, passive investing has exploded. Trillions of dollars now flow automatically into index funds. Most investors never pick individual stocks. Instead, they buy the index. And the index buys the stocks for them, which means inclusion in a major stock market index is no longer just a badge of honor. It's a pipeline to automatic demand. The moment a company joins a major index, billions of dollars may begin flowing into that stock. Not because investors carefully analyzed the business, not because they studied the valuation, but because the rules require those funds to buy it. And that's a dynamic very few investors fully understand. This is why the SpaceX story matters. Not because rockets are exciting, not because Elon Musk generates headlines, but because it reveals something deeper about modern financial markets. The system increasingly rewards scale, it rewards index inclusion, and it rewards access to passive capital. The question isn't whether SpaceX is an incredible company. In many ways, it clearly is. The real question is whether investors are paying a reasonable price for that future. Because history has shown that even extraordinary businesses can become disappointing investments when expectations become too extreme. Some analysts argue that SpaceX's valuation already assumes extremely optimistic future outcomes, while others believe Starlink and future space infrastructure could justify those expectations. Morningstar +1. And that's why understanding the mechanics behind the market is just as important as understanding the companies inside it. The biggest opportunities and the biggest risks often hide beneath the headlines. And that's exactly what we'll continue exploring here on KC Prime. If you enjoyed this breakdown, make sure to subscribe and turn on notifications, because the stories that matter most in finance are usually the ones nobody is talking about.